Hi, Jonathan York, Bay Financial Partners, looking at the investment markets. Pretty interesting time in the US after the recent Fed meeting. Now, while no one expected the Fed to cut rates, the outlook now looks like they're potentially looking at one cut this year. That's come down dramatically from the start of the year. They were looking at 4 to 5 cuts this year. But interestingly, it's not unanimous. 4 are saying no cuts, and 1 is even saying no cut in 2025 as well. Now, current target range is 525 to 550. But interestingly, the long-term neutral rate has now edged up slightly to 2.8 from 2.6. Now, data in the US as well continues to be a little bit mixed. Weaker retail sales, that's seen sort of market rates fall just a little bit. But also as well, the latest CPI data, that was a little bit weaker than anticipated as well. Now, core data for that came in plus 0.2 and 3.4 year on year. That was versus plus 0.3 and 3.5 year on year. So again, sort of nudging down slightly and sort of edging obviously in the right direction. That's obviously seen term rates sort of fall, 10 years down at 421 and the 2 years down at 472. Now, what could be really very interesting here as we come up towards sort of month end and also quarter end, as well as some of the rebalancing. And some of the big tech companies, Nvidia has now taken over as the world's largest market cap. Now, that does have some pretty major implications because for some of these funds, it's based on sort of market capitalization. And, with Nvidia in one particular fund, current weighting is around sort of 4.5%. And if it remains as the highest market cap, that weighting could then go up to around 21%. And then see Apple, which is currently around sort of 22% in this particular fund, that would fall down then to around 4.5%. So some pretty major moves potentially coming forward in the next sort of week or so. Other interesting development is obviously Putin's visit to North Korea to see Kim Jong-un. It's quite interesting because, they're talking about a special relationship there and really building one on trust and everything to sort of counteract the aggression from the West. Which is really quite ironic and pretty hypocritical, really, because obviously Putin's invasion of Ukraine that is now stretching over 800 days. Now, oil's popped back above $80, currently around sort of $80.60 and change. And that's really on the back of a couple of reports potentially saying that supply could be a little bit tight in the next sort of 3 to 6 months. And especially with OPEC Plus sort of refusing to sort of increase sort of supply as well coming forward in the production side. Now, the UK, quite interesting, inflation sort of heading in the right direction and looking like it's going to print around that sort of 2%, but potentially that doesn't see the Bank of England cut interest rates because the UK is the latest country to sort of be experiencing the sort of Taylor Swift effect. And some of the numbers flying around on this, it's pretty amazing. Potentially it could put in around sort of $500 to $600 million into the UK economy. Now, obviously, in the UK as well, with the election getting ever closer as well, it's really looking pretty dire for the ruling Conservative government at present. Now, in the EU region, after the ECB did cut interest rates and signal that potentially there's more interest rate cuts to come as well, shifting now towards sort of political situation where obviously France has called that snap election, and Macron coming under increasing pressure with a lot of domestic sort of protests about his government. So if that follows the suit of the recent sort of European elections with sort of a move to the sort of the far right, that could be pretty interesting to see how it sort of plays through. And all this, at a time when really the EU region should be sort of, experiencing some pretty reasonable sort of spending and a little bit of growth as well, because, with the summer months coming forward, a lot of tourists in there spending money. And obviously also as well this year with the Olympics as well in Paris. Now in Australia, the Reserve Bank left rates on hold, cash rate at 4.35. Potentially signal that if data does indicate, then they are prepared to put up interest rates. And that could be quite interesting because, over the next sort of month or so, Australia is going to start to see some of those sort of tax breaks coming forward, which potentially puts around 3 to 4% extra disposable income in the pocket of the Australian consumer. Now that will be a similar case here in New Zealand with the increased tax brackets kicking in at the end of July that were announced in the budget. Now migration numbers are still holding up, but they are falling from the recent peaks. Also, inflation is falling as well, and we've just seen one of the weakest sort of couple of months for food inflation, which is obviously all positive for the Reserve Bank. But then the latest GDP figures are expected to show the economy still pretty flat. Indeed, some economists are still expecting a further contraction and a negative number. So will that see the Reserve Bank cut interest rates sooner rather than later? Because really the New Zealand economy does need a boost. It is really flagging out there and needs a bit of a pickup, and certainly a rate cut would help that. And potentially the longer they leave it, then the more aggressive the rate cuts will be. Domestically, Infratel have just completed a pretty reasonable capital raising there. Raised just around $1 billion from the institutions, and they've got about another 150 million to raise from the retail investors. That was well supported, oversubscribed, and it really does look a pretty reasonable shape for Infratel going forward. Better news on the housing market as well, because listings were up in May around 25%, sales were up around 8%, and the time to actually sell your house fell by around 5 days. That's back down to 44 days. So again, a little bit of encouraging news out there for the housing market. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.